Hey everybody, welcome to the live stream. Just waiting for people to come in. I hope it's live. I don't see anybody here yet. Oh, okay. I'm Taylor. Hey, what's up? I think I scheduled it for 6 p.m. I don't know, but my notification said 1 p.m. Hope it wasn't too confusing. But leave a comment because we do 2 raffles. You can win a $20 Amazon gift card. I'll email it to you. Or I can do 2 DCFs live for you. So make sure you comment. And you can donate any amount you want for DCF, but I think it should be $5. If it's below $5, I might still do the DCF unless I have a lot more requests. But 5 is you'll definitely get it. If it's below 5, you'll probably get it, unless like there's too many people to respond to. I'm going to try to do 1 p.m. I like it better earlier. I don't like doing the 6 p.m. live stream. How you doing, M. Taylor? So you guys been following oil? The market's still crazy, right? I don't know why these integrated oil companies like Shell and Exxon, their stock price isn't going up that much. Oil is going up a lot more. Let me show you what I mean. Yeah, don't check your accounts. That's better. Okay, so the price of Brent crude in the past year, they mimic each other. Savvy Money. Yeah, Bitcoin, $10,000. I think that's going to be the price. So in the past year, Brent crude is up 54%, Exxon 47%, Shell 21%, and Energy Transfer is down 5%. In the past 2 years, that's it. You see, they track each other pretty closely. At least Brent and Exxon did. But look, in the past 2 years, Brent crude is up 168%, Exxon 99%, Shell 47%, Energy Transfer 27%. But look at the past 5 years. It's kind of, maybe it's because of dividend payments. That's probably why. Brent crude is up 139%, while like Energy Transfer is down 38%. And Shell is also down. It's dividend payments. That's why. If they didn't pay a dividend, they'd probably track a lot closer. That makes sense. Because I couldn't figure out when I was doing the videos. So yeah, make sure you leave a comment. So WTI crude is up 110, Brent is 113. So in case you didn't know, WTI West Texas Intermediate, that's mainly U.S. companies track WTI. and Brent crude are mainly non-US companies track Brent crude. Savvy money. What do you think Bitcoin? Do you think it'll go under 10,000? Because it fell below 20 now, right? It's like 19 something. Right. ET acquired Enable Midstream. I think I mentioned that in my last ET video. And if you want a DCF, you got to just donate. You could donate anything. I want to show you guys this comment. So I did a video on Agritech, Verde Agritech. It's a potash company. They produce potash. Potash is used in fertilizers. So this guy's like, their guidance for 2022 is 87 cents a share, not 16 cents as listed in your analysis. But 16 is their actual, like what they actually, their earnings per share in the past 12 months. That's the actual number. Because I pretty much use actuals, as you guys know. And he said the PE is 8, is 9.18. And then I just replied the calculation for PE, which is 8.52. 8 is a stock price, and 52 is earnings. So his response was, so you use 2021 EPS to calculate the PE with the mid-year 2022 price. So all I did to calculate PE is I took the PE is market cap over earnings, as we know, right? So I took the market cap, and then I divided by the trailing 12-month earnings, which is like every website. That's what they do. And and then he's like, you need to know the half-year EPS for 2022 to calculate the PE at mid-year. I mean, it is, which was 21 cents. It is reasonable to assume Q2 2022 EPS is the same. So the mid-year PE of 8. This is why people think investing is so complex and difficult, because people talk like this and nobody understands what they're saying, including me. So they think, oh my God, he must really know things. He must be really smart. I don't understand what he's saying, so I'll never understand the stock market. It's just simple math. It's very simple, this investing, and it's very simple. When I try to convey to people, understanding anything is pretty simple. We all can understand how cars work. We drive one all the time. That's pretty simple. We know the idea of a car, what it does. Now fixing an engine, building a car, that's pretty difficult, right? So just try to understand the high level, and he makes it so complicated. So I asked him, and I kind of knew the response, but I was just kind of like jabbing him. I said, "Are you new to investing?" And he's like, "Probably." And he said, "Probably did investing before you were born." Which he's kind of like saying that as like he's proud of it. Meanwhile, he can't even explain PE simply. He has to do this convoluted. And then I just said my PE matches Yahoo Finance. And I'm not implying that's if you match Yahoo Finance, you're definitely right. But I calculate my numbers on my own. I don't pull it from anywhere. So that may imply that maybe mine is correct. And someone, of course, had to respond that doesn't mean it's correct. But it's so don't try to like. I hate when people do that. This is the most annoying comments. Is people who try to. They want to like sound like they want to sound really knowledgeable and smart, like an authority figure. So they try to like critique you a lot. But it's so obvious what they're doing. They're just trying to sound smart and trying to make you sound dumb. It makes them feel smarter. But it's so obnoxious when people do that. And I don't care. He might be really knowledgeable and really smart. He probably knows a lot about the market. But when you try to like talk about PE and make it so confusing, I mean, I've done that before. Like I try to sound like smart to people, and then I make it, and I present my case so convoluted that if no one understands me, maybe they'll perceive me as being smart. I don't know. I guess nobody cares about these. I complain a lot about comments. It makes me feel better to complain about it. Make sure you leave a comment so I could put you into the raffle. Unity? Like we're a unit. We're a unity. We're one. Is Ben, are you here yet? Because any situation you could nitpick. Because I remember in grad school, we were doing like a case study on. We were looking at Ritz-Carlton. We were trying to do like an analysis, like what percentage of people had complaints, and I can't remember what exactly class it was, but so like a Ritz-Carlton is a really high-end hotel, but when you look at the complaints like throughout the year, there's like thousands. Like, oh, the bathroom floor was dirty, or we were missing a towel, or I mean, you could just imagine if it was a shitty motel, how many bad comments they would have. And this is a really high-end luxurious hotel. So if you want to find a problem with something, you will find a problem with something. There's no doubt about it. Like if you're in a bad mood and you go into Starbucks, you could find 10 problems. The line is long. They only have one cashier on hand. They were out, like one of the muffins. They didn't have they didn't have a blueberry muffin. They only had apple crumb. You could find 100 problems with any situation. Or if you're in a good mood and you're not looking for problems, you probably won't find any. But I mean, this stuff doesn't really bother me. I mean, I think it's obnoxious. I just I find it interesting to kind of like psychology of how people think. I find that interesting. But I'm excited. The market is crashing. Like it's so exciting. The buying opportunities. If you're going to retire within 3 years, I'd be a little nervous, of course. Well, if you really, really needed money within the next 3 years, but my time horizon is like 20 plus years. So I'm excited because I was thinking the way to make the most money possible is if the market was almost zero, like it was like real, like the market cap for the entire market was like 1 penny. Now that doesn't make sense, but and if it was like that indefinitely until you needed to retire, like right before you retired, that's when the market went to where it should be, like whatever it was, um, uh, like $1 trillion, a big market. So the lower, as long as you don't need the money, the lower the market, the price of stocks, the better. Assuming they don't go bankrupt, the companies that you're investing in, but the lower the better. When you're investing in them, because you're getting cheap, you're buying at a cheap price. Ben, yeah, we're gonna be working again, Ben. We're back to working. But the stuff you're gonna do, Ben, it's not gonna be hard. It's gonna be really easy, but it won't be like, I mean, you may vacuum some days, things like that, but there's not that, getting people coffee, how long does that take to do these menial tasks? And there's not that many employees, so you're gonna do a lot of like real business work, like real projects. I'm not sure how much you'll get. I don't think it'll be that much more than what I would have paid you. Because I shouldn't talk about salary, but it'd probably be, I don't know. You could text me. I don't want to say salary. But yeah, leave a comment, everybody. We do 2 raffles. I'm working on I'm working on Shell. I never did a video on Shell before. I did Shell midstream, but never Shell, the huge oil and gas company Shell. And I'm working on Total Energies. That's a French oil and gas company. That's one of the super majors. Total. That's one of the. It's the largest oil and gas company in France. Marcello. Ido. Where's everybody from? Like what? Never sell. Shell is a British company, but people in the Netherlands say, "What countries or state are you in? Are you in If you're in the United States, just what state are you in? But if you're not in the United States, what country? London, Canada, Israel. I guess you could say the city. I'm kind of curious now what city people who are not in the United States are in, or what region. Like what region of Canada? Kansas. We're not in Kansas anymore. Macedonia. I wonder how big my Macedonian population is. I could see what countries. I'm going to visit the Netherlands. I know a lot of people in the Netherlands from this channel. Saskatchewan. Saskatoon, Saskatchewan. Home of Nutrien, yes. I remember when I did my Nutrien video. I'm trying to think. Where does it say the countries? Oh, here it is. I'm in like hundreds of countries, like 500 countries I'm in, even though there's not even 500 countries. There's only like 180, but I'm in 500 countries. Now I'm in like probably 100 countries. U.S. is almost exactly half. Canada, UK, 4% of my views. Germany, 3%. Netherlands, Singapore, India, Australia, Israel, Czechia. Am I saying that right? Czechia? Czechia. Is that just Czech Republic? Is that Canada? I used to say Canada. I don't know, like as a joke, because it seemed like a lot of countries end in IA. Like, why did I say that? I don't know why I say that. It was just jokingly I say that. I used to go to Canada a lot because I went to college in Buffalo, and it's like a 10-minute drive to Canada, literally like 10, 15 minutes. So we used to go to Canada a lot because when you're in college, especially in the beginning, you're not 21 yet. I wasn't 21 until my senior year. So in Canada, it's 19 to drink. So we go to Canada. Spain, Finland, Japan, Poland, Portugal, Denmark, Romania, Brazil, France, Mexico, Belgium, Hungary, Switzerland, Malaysia, New Zealand, Saudi Arabia, Hong Kong, Austria, Indonesia, Ireland, Philippines, Greece. I went to Greece on my honeymoon. Bulgaria, Thailand. I used to know the currency for most countries. I probably forgot a lot. United States dollar, Canadian dollar, the British pound, Germany's on a euro. Correct me if I'm wrong, but yeah, Germany's on a euro. Netherlands is on a euro. Singapore dollar. I'm pretty sure they're a dollar. Indian rupee. Rupee, RUPE. Indonesia is the rupiah. I'm a romantic guy. Yeah, that was probably the best vacation. Greece, it was nice. Australian dollar, Israeli shekel. I'm not sure what Czechia is. That's Czech Republic, right? Euro, maybe? I don't know. SUZ. And Ben, let me know how much they pay you, and I could give you a little extra money. Like I'll subsidize your salary so you get paid more. You have to get paid more than magnesium. Thank you, Omari. Marcelo. I know the capital of most countries. Have I ever covered a small cap? Yeah, a lot of small caps. Like probably 100 small caps. Dark Pulse. Yeah, that was one. Is this Brazilian, this company? That was a nightmare, Dark Pulse. Always complaining. I do complain a lot. Paper and paper products. Not Dynacore. I never did that. Paper and paper products. Ben, I'm glad you asked about the live stream. I forgot it was 1 p.m. I was thinking 6 p.m. Brazilian has the Hey. It's written as real, REAL, but it's pronounced Hey. You can just divide by 5 to get the US convert it to US dollars. Boeing down. Boeing's really struggling because their planes have been malfunctioning. I'll be consistent here. Okay, I think I converted all the numbers correctly. It has a pretty high whack. It's Brazilian companies tend to be a little more risky. I'm coming out with 1446. They're trading at 950. Revenue is growing a lot. 13 billion to 41 billion. And these are in reais. So you have to divide by 5 to understand what they are in US dollars. Free cash flow growing from 2.7 billion. Look, Ben, it's Jake. Suzano. It's a pulp and paper company. His largest pulp in Latin America, company's headquartered in Salvador. The company's leader in paper board market. Eucalyptus pulp. Eucalyptus. Suzano has. Yeah, looks pretty good. They've been around 100 years. Single cell organism. Single cell. Bank and finances. I think I got everybody. Dunder Mifflin. Yeah, that's where I get my paper from, Dunder Mifflin. Make sure you comment. And if you win a raffle, I can just do 2 DCFs. Dunder, yeah. That's fun. You ever see the on Saturday Night Live when they did the opening on SNL, and the characters were who was the host? I think it was, I forget. I don't think it was Steve Carell, the host on SNL, when they did that skit. I can't remember who. Oh, it was what's his name? It was Dwight Schrute. He was the host on SNL. For Sean Myers. So let's see. They invest a lot in capex. They're bigger than the other 9 companies combined. Come on. The other 9 companies combined are 7.6 billion. They're 13 billion. Oil's going up a lot. It might come down. I don't think anytime soon. Yadada. I didn't sell my car and buy Chevron stock. Everybody you gotta sell your car so you can't get to work and buy Rainn Wilson. That's his name. I would have thought of that if I wasn't doing a live stream. When you're doing a live stream, at least when I'm doing a live stream, I'm not as relaxed. They have a really good a 2.8 PE. Holy cow. Yeah. Yahoo Finance is at 3. Price to free cash flow 6. But when you invest in a Brazilian company or Chinese company, certain countries, they may have really good ratios, but that doesn't mean the stock price will go up, because generally, if you just look at ratios, pretty much all Chinese stocks seem undervalued. But there's that country risk premium that you have to kind of like add to your analysis. Eight. Oh, Marcelo. It's over. So Marcelo, you email me if you want $20 Amazon gift card, or I can do 2 DCFs. That was one of the quicker raffles. You let me know what tickers. Let's see. It's hard to look at the market, right? It's just look at Revlon. They did they actually file? I think they filed bankruptcy, right? And the stock price, it bottomed at $1. It's already up to close to $4. Dynacor and Citigroup. DNGTO. I did a video on Revlon when they filed. I think when they announced bankruptcy a year and a half ago, and it's pretty bad. Like, I was kind of saying in the video, the company's in really bad shape, but I don't know. I wouldn't buy it, but that's it. When these companies announce bankruptcy, the stock goes down so much, but then it goes up like if 5x's like in a week. It's just crazy. Oh, great. There's no earnings forecast for Dynacor. Reliance Industries. Oh, that's why it went up a lot. But it seems like it's almost impossible to make, even though the stock price goes up so much, it's like you always miss it. Like when it hits $1, like it goes up so fast, and you don't have a chance to buy it. Or you do buy it. Say you bought it $2, then it goes up to like $4, and before you know it, it's back down to $1 before you get to sell it. It's hard to like make money on those things. You have to really not only time it, but you have to like have access to the market at a certain time. Like I guess you could put an order in, like a buy or place a buy or sell order, like a limit order. But how can you predict the future? How can you say, "Oh, I'm going to pick up Revlon at $1"? You could do that, I guess, with any stock. You'd have 1,000,000 limit orders in there. What's the beat place to trade on TSX? The best place to trade on TSX? I don't know. I mean, I guess like any website, like TD, E-Trade, I'm sure all those are fine. But you have to live in Canada to trade on the TSX. Or you have to get special access, which is, I don't know how much you have to pay, but I mean, you could trade in any country, but there's a price to, and if you live in the US, say you trade on the Hong Kong Stock Exchange, it's all in Hong Kong dollars. So you have to convert also. That's a good thing about trading like ADSs. So if you want to trade like a foreign stock, if it's like an ADS or ADR, whatever you call it, everything's in US dollars. The dividends in US dollars because it converts everything. They make it easy. You look at ham.u. Generally, a stock like this should move with the price of gold. Kind of like investing in an oil stock, it moves with the price of oil. They crush. So in the past year, gold is up 4%. This is up 23%. So it obviously doesn't track gold because in the past 5 years, it's much closer to gold. This is up 58%, gold 45%. So this seems like a good stock, and you get 3.3% dividend. So we don't have a future. There's no revenue forecast for the future. They've been going. I'm gonna do 20% growth. just for the next 3 years. Wow. Let me do less because it seems like the stock. I'm going to do 10% growth. Let's use the highest whack, 8.5%. Yeah, it seems pretty undervalued. Even the more conservative model, I'm coming out a stock price of 640. They're trading at $3. The thing, if it's when I pull up the competitors, it only pulls up that the website only pulls U.S. companies, and if it trades over the counter, it doesn't pick that up. So only U.S. companies that trade on a major exchange like the Nasdaq or New York Stock Exchange. So I can't compare them to their competitors because it doesn't pull up Dynacor in the. So Citigroup was the other company, right? U.S. or I could definitely do it. We might not get the best value. Wait, Corsair, Chapter 11? Whoa. Corsair, Chapter 11? Why did you write Corsair, Chapter 11? They didn't follow Chapter 11, Corsair. Yeah, we could do Citi. DCF is usually not ideal for a bank or insurance company, but we could still do it to see what it comes out to be. Ben, are you still here? Okay. Citi expanding across Latin America. Future growth. Banks diversified. Warren Buffett owns a lot of Citigroup, right? Okay. 46.52. Citigroup, like banks, usually price to book is a good thing to look at for banks, or price to tangible book value. And DCF is a little hard for a bank. This has a normal value. So I'm at 73, even though they're 47. Let's use the highest whack, 9%. $68 with the higher whack. Macerich, I put all my cash and margin behind all during the election and actually paid off. Nice. That's awesome, Bradley. So, yeah, I know they have a really good price to book. Because what you're really investing in is their assets, like the loans they have outstanding and the cash people deposit in the bank. So it's assets are really important for banks and insurance companies. They invest a lot in CapEx, more than any other company. They do have a high debt to equity ratio, but it is lower than average, but it's higher than the top 6 banks. They pay the highest yield according to this list. Well, not as high as these two, but higher than the top 6. And free cash flow is another number that's not ideal for a bank. They rank 7th in market cap. I would say looking at the price to book, is probably the best. The other 3 I don't think make so much sense for a bank. But lots of revenue. Oh, nice, Richard. Yeah, sell calls, collect your premiums, especially in a down market. Instead of being down 20%, you're down 16% if you sell calls. I remember when I first learned about covered calls, I kept doing it. I was so excited to learn something new. I don't really do it anymore. Price to book, yeah, 0.5, which is really good. Ed, finally, Ed and Richard are here. It's not the same without Ed and Richard. Okay, so cap equity. So price to book is market cap over equity. So market cap 90 billion, equity is 198 billion. So market cap, we all know what market cap is. We don't have to talk about that. That's the easiest number to figure out is what the company's worth according to the market. So equity is these numbers. These are in the billions. So their assets is 2.4 trillion. Their liabilities are 2.2 trillion. So their equity is 198 billion. This is in thousands. I'll make it all the same. Okay. So all the numbers are in millions on the spreadsheet to make it easier. So assets 2.4 trillion, liabilities 2.2 trillion. So the equity is 198 billion. Just rounding, but same thing. So the value of a bank, well, I mean, it's simple, but I'll say it anyway. The way a bank makes money is it collects funds from people like you who put money into the bank, into their savings account. So it collects funds from various people who want to store their cash at Citibank. So you give Citibank $10,000 to put into your savings account. I go to Citibank. So I go to Citibank, or you go to Citibank and you give them $10,000, they give you 1%. That's the interest rate. That they're going to pay you. I know it's probably a lot lower. Let's just keep it simple for the conversation. So I go to Citibank. I need a loan. They give me $10,000. They give me $10,000. And I have to pay 8%. That's the interest rate I have to charge. And it's different. You know, I might pay 8%, you pay 6%, somebody else pays 9%, depending on the credit risk. The higher the risk, the higher the interest rate. So that's just pretty much how banks make money on the interest rate spread. That's a really simple way, but sometimes banks, you may buy a CD. You may not put money to a savings account. You may buy a CD, but they still use the money you bought the CD with and then lend it out to people like me at a higher rate. Or the bank may go to the government and borrow money from the government because they need to lend out money. So they may borrow $1 trillion from the government, and then they turn around and lend that money out to people like me and you. So that's the hard part of valuing a bank, is that you have to look at the assets and the liabilities and try to identify, like, say for instance, the $2.2 trillion, they lent it out to people who are really high credit risk, people who there's a good chance they won't pay it back, really risky people, then it's a lot different, right? Than if to say the $2.2 trillion, they lent it out to really low credit risk investors, like who are very likely to pay the money back. If it's a really, if their liabilities are low risk, there's a good chance of them getting that money back. Then this is a really good price to book, right? But what if the money they lent out is extremely high, it's very risky, like when you invest in subprime bonds? Then maybe the 0.5 is not so good, right? So that's the hard part about valuing a bank is trying to understand the risk, and the chance of them getting that money back. Of course, if they lend money to, say they lent money to me, say I'm a really high credit risk. I did bankruptcy a couple times in the past. I pay late a lot, so they may charge me 18% to borrow $10,000. And say say you have a business and you're very profitable in your business and you have no debt, they may charge you 6%. They have to charge you more, charge me more because a higher risk of me not paying. So if they lend to a lot of people like me, and even if half of us don't pay, they'll still make money. Where people like you, who are the low credit risk, if a couple people don't pay, it's fine. They'll still make money. Okay. Richard Keener. Oh, there's still one more we have to do. ORI. And people think I must never lose money. I must make millions and millions from investing in the market because I understand this stuff. Just because you understand it doesn't mean you can make money. It helps to understand it and you avoid some risky investments, but doesn't mean I can predict the future. I could just explain the past probably better than average, but I can't predict the future. I'm happy if I can average, even if I average 10% over a long period of time, that would be really amazing. But what's really interesting when looking at a bank is actually going into the financials and trying to understand it even deeper. Okay, I get an extra 5% annualized on stock I own with very little risk. I mean, that's kind of like what Warren Buffett does. Like, if he invests $1 billion, if his return on investment, say, is 15% return on a particular investment, he puts $1 billion, he expects 15% return. But there's a 5% chance the company will go bankrupt. I'm just making up numbers. If he could find a similar investment with 15% return something like, I don't know, like a 14% return and a 2% chance of bankruptcy. He's probably more. I don't know. I'm not explaining this right. Okay, let's do the raffle. Omari. Yeah, I've done a bunch of banks. It's just a little harder to explain, but I mean, we talked about it at the high level. It makes sense, right? It's I understand it on a high level, but I don't really understand some of the things like I don't know how to value certain loans. Like I don't know like how to like, assign a risk rating to certain investments. I don't. Ed, are you in? You never told me if you're in. You just let me know if you're in or not. I'm not sure. 16, 7, 17, 4. Oh, this is a good one. Lots of people getting picked. Bradley, Oliver. You can email me, Bradley. I'll be right back. 1 minute, 2 minutes. Okay. What did I win? Oh, Bradley, you won a $20 Amazon gift card. So you can email me and I'll email you back a $20 gift card, or you can pick 2 tickers and I could do the DCF right now. ORI. Hypo? Old Republic. I like New Republic better than Old Republic. Insurance. Insurance is another tough one to do. We can still do it. It's just like DCF. You can rely on a DCF with like a big company like Microsoft. You can. It's a little more reliable, but insurance companies, you may want to do other analysis. Insurance companies. Who insures them? I want to invest in a person that insures that insures the companies that insure insurance. No, I want to invest in a company that insures companies that insures companies. Reinsurance. Well, reinsurance doesn't mean you insure insurance companies. I mean, you might in reinsurance, but you can insure anything in reinsurance. You can insure cars or homes or. Do you guys know what reinsurance? Like say for instance, I'm Geico, and say I have 100 billion of car insurance, right? And we have I can't remember the exact term. I'll just say it in normal terms. Say for instance, we have a rule at a Geico. We can't insure more than 10 billion in a certain state, right? That's just a rule. We can't insure more than 10 billion of New York drivers because we don't want to have too much risk to a certain state. And you could do this with a lot of different things. You could say we can't insure more than 50 billion of female drivers, or we can't insure more than 2 billion of BMW drivers, whatever you want to pick. Say, for instance, they have a rule, New York is a 10 billion limit, and it could be different for every state. It could be Vermont, it's 3 billion. So they could still take in insurance from people who live in New York. Say they have 11 billion. They insured 11 billion of New York drivers. What they would do is they would cede, is the insurance term, 1 billion. So say there was a company called Auto Reinsurance, and all they did was take other companies' risk off their books. So Geico would send 1 billion of insurance. So say that was 25,000 drivers. They would send it over to Auto Reinsurance. Now Auto Reinsurance has 1 billion of reinsurance. They're reinsuring Geico's that 1 billion. So auto reinsurance receives all the premium. And the driver, like if I got insurance through Geico, I would never know this. It's still through Geico according to my policy. But Geico, according to their policy, for me, the risk is at this company. So if I, for instance, crashed my car and got Geico to pay for the bill, Geico doesn't have to pay any money because auto reinsurance pays them. So that's just reinsurance. You're taking insurance from another company. So it could be anything you're reinsuring. I think that's clear, right? Cameron, thanks for coming in. It's not the most fun. I don't have the best outgoing personality, but I think I provide a lot of good information. At least that's what people tell me. And companies, their entire business model is reinsurance. Or there's companies like Geico probably assumes insurance from another company. They probably also do reinsurance. I'm sure almost every insurance company does reinsurance because you can't have too much risk in a certain category. Not just because insurance companies are highly regulated. They have to have a certain amount of cash on hand. They have to have a certain amount they can't be too risky in certain areas, because what happens when the insurance company say I'm just making this up. Say Colombia is a really risky place to insure drivers. But the good thing about Colombia is you get paid a big premium. So if I was a driver in Colombia and I called Geico, they would charge me a lot more money than if I was a driver in Canada or US. So say Geico wanted to make a big return, like big margins. So they would just focus on Colombia. Let's get as many Colombian drivers as possible because they pay the biggest premium. But what if there's a big, a huge recession in Colombia and most of the drivers just default? They can't pay, or they get into accidents, and they can't, then the insurance company might go bankrupt if they have too much risk in a certain category. So they just have to spread the risk around. I actually worked in insurance for like 7 years. I was insuring like subprime mortgage bonds and CDOs, things like that. The stuff that ruined the economy. What the hell happened? 9.2. What's a reasonable PE? Well, it depends on the company. And depends what industry the company's in. I mean, if you people like to do a blanket, like below 20 is good or below 15. But you really have to look at the company. If it's a really risky investment, like Amazon, like Tesla 10 years ago, you were willing to invest in Tesla with 1,000 PE because you knew the potential for the company to grow was so great. But maybe a 10 PE for certain companies is too risky, like Lumen Technologies. Yeah, The Big Short. That's exactly what I did. I love that movie. It was watching my life, what I did at work, and they did a good job. Oh yeah, if you want to know what I did, that's exactly what I did. Yeah, I mean it seems undervalued. I'm coming at 49. The revenue is expected to decline a lot the next 2 years. Make sure everybody says, what country are you in? We talked about PE last week. So if you want to like 10x or 20x your money, you're not going to do it with a company with a PE below 20. If you want huge returns, look for companies with a PE above 100. But if you want more reliable returns of like 3%, 5%, 7%, 10%, something more reliable, then look for a low PE. What's going on? Hypo's next. I'm falling behind on. But if you want to know what a reasonable PE, it's better to if you want to donate $5 or more, any ticker, and then we can talk about it in more detail, because it's hard to say like what's it's like what's a good salary. It's kind of like, well, it depends. Do you live in California, or do you live in Rhode Island, or you live in Mexico, or you live in South Korea? Or, if you're a high school dropout, it'd be different than if you just completed your PhD, you're a doctor, so it's kind of like that. Like, what's a good salary? It depends on a lot of things, right? A Palantir, oh boy. But Old Republic, they have really good ratios. Look at 11% dividend. But I would never like bash someone. Like if you ask on one of the Facebook finance groups, what's a good PE, you'll get a lot of hate. A lot of people will make fun of you. But I would never make fun of someone, because it's a valid question, but it's kind of like you just need to understand a little better, and then you'll see what I mean. But 4.4%. Yeah, it depends on a lot of things. It's like it depends on the sector, but even the same sector, like at one point, Ford with a 7 PE was not as good as Tesla with 100 PE. Like when Tesla had a PE above 1,000 for years. Then when it got to around 100, it was amazing. It was like it was a good deal. Hypo. Hippo Holdings. What was Bradley's other stock? Yeah, Bradley? What was your other stock? SFT? Let's do SFT. That's easier. Come on. Another insurance. If you guys are watching, I talked about why banks are a little more difficult to value, because you have to understand the risk. You know, the money they lent out to others, like how risky is that, and what are the chances of them getting it back? Same thing with insurance. Same concept. They receive money from people who pay premiums. They also receive money from the government in loans and things like that, and then they lend it out, and just to cycle. So it just the risk of their. But I mean, insurance companies and banks are kind of generally pretty safe investments. I mean, it's like, how can you get more guaranteed than a bank? Like your whole business is for people to give you money. Like people just want to give you money. When you sell a product, you have to like convince people. You have to do a lot of advertising and marketing, convince people to buy your product. The main risk in a bank is if they make bad lending choices, like they start lending out to people who don't put any money down on them. They want a home, but the bank doesn't even ask for a down payment. They'll just give you the home loan, 100% of the loan. Like when subprime crisis. Does anybody know why these banks, like these big banks, lent out so much money to people to buy homes, and the people didn't even have good credit, and some didn't put any money down, but the banks would just lend them money. They wanted to give their money away to people. Does anybody know why the banks did that? They gave out so much money to these borrowers who ended up defaulting, and then and it caused us a huge recession. Diane, thanks. So yeah, it's hard with a. I mean, they have negative revenue. Let me fix that. Okay, I fixed it. I had a revenue and fuck. Okay. Look, their revenue is supposed to go from 99 million to 140 to 250 to 470. It seems a little aggressive, right? But let's just pretend it's a normal growth of 10%. Okay, if it's a more normal growth and not what the forecast is, I'm coming out with $1.16. They're trading at 95 cents. But when you invest in a company under 1 billion market cap, it's pretty risky. It's risky stuff. So either you're gonna like 5x or you're gonna lose your investment. And there's like probably a 2% chance of 5xing and an over 90% chance of losing most or all your investment. Look at that price to book, 0.6. So you could have a really good price to book and be a bank or insurance company. You could just give money out to everybody. Even if they can't pay it back, just give money out to everybody. Okay. Marcelo got it right, MBS. That's why they lent money out, because of mortgage-backed securities. Well, Joe said it better. Yeah, because there's no risk to the bank. They just sold it off. And then I would package it up into a bond and then find investors to buy the bond. So there was no risk. That's something we could talk about in real detail, because I did that for 13 years. Palantir. And the reason we went into recession is not because does anybody? Yeah, Ashish, I think the S&P 500 is a great way to do it. Do you know why we went into a recession? Like it's like that was the first step. Is they sold off the loans and they packaged them into mortgage-backed securities. But well, at least do you know the reason I think we went to a recession? Like, because I think there's more to it. There's another step after that, which I think made things a lot worse after they packaged the loans. Inverse ETFs? I don't know. Inverse ETFs. I gotta even think what that is. Do you mean an EPS that shorts the market? Is that what you mean? Like a bearish ETF? I think it's trouble. Big trouble. That was one of my first videos. How you can't. You're talking about a leveraged, like a triple, like a double, a triple leveraged ETF that shorts the market. You can't win on those. In the short term, you might make a lot of money, but in the long run, you have to lose everything. You're talking about like UCO and USO, like those? Is that like what you're thinking about? The ultra short? Yeah. I did an early video on UCO. In the long term, they all go to zero. If you understand the math behind it, it makes a lot of sense. But in the long term, it has to go to zero. Okay. Okay. I'm at $5 for Palantir. Let me use the lowest whack. 9.4. Let me use 9. I'm at 554 for Palantir. Their price to free cash flow is 75. They have negative earnings, so we can't look at that price to book. They rank 14th in market cap of the companies. But like, it's hard. A DCF is not ideal. I mean, you could do it for anything you want, but it's not ideal for a company that doesn't have consistent numbers. Like, you could see negative. You need a company like Google or Apple, like consistent positive numbers year after year. But it is a guess when you invest in companies like this. I invest in some companies that the DCF has such a bad. The DCF says a stock is really overvalued, but I still invest in it. There are some companies I've done that. Well, yeah, that's the thing with Palantir. What they do is so kind of like unique. It's almost so unique that most people don't even understand what they do, which is not a good thing. The first thing when I invest, the first thing I just want to at least understand what the company does. I mean, of course, I want to learn as much as I can, but at least understand what they do. And I don't really totally understand what they do. I think I understand what they do. I probably couldn't explain it to somebody. I did a video on Shift. Okay, Shift. $0.64. This was a SPAC, right? It was so it was $10 at one point. Because all SPACs start at $10. Lots of SPACs are getting below $1. I know Palantir has a lot of government contracts. They work on terrorism. I don't know how, but they do. Okay, I mean, of course, it's going to be undervalued if they hit these revenue targets. Like the revenue target for 2022 is $1 billion, then 1.5, then 2.4. Let's just pretend it's even worse. It's 10% a year. Okay, let's do a low target, 10% a year, and I'm giving a whack of 20%. So I'm coming out $5, but I don't think it'll ever hit that. So they have a lot of revenue relative to the market cap. Right before a company goes bankrupt, they have like the best price multiples. Like they have a PE usually a 0.1 right before they go bankrupt. If they have positive earnings, then they'll have a PE also like 0.1, 0.2. Hey Pablo, I think that's it, right? No more requests. Did that Diane donated, but I don't think she. I think it was just donation. No. Yeah, Palantir. I've heard a lot of things what they do, and it's hard to kind of put my finger on it. Like, I mean, I can't build an electric car, but I could at least explain what Tesla does. They sell EVs. They also, have charging station infrastructure, and they do sell like solar panels and things like that. But the main business is electric vehicles. But of course, I don't know how to even come close to building an electric car. But I could at least understand what they do. But Palantir, I can't. I mean, I read about it, but it doesn't make sense to a lot of things. Those same $10,000 are lent 10 more times. I think Pablo is explaining the what I was trying to get to earlier. Why we went into a recession. It wasn't that we lent money to people who couldn't pay it back. Is that we created all these CDOs. So it's like we lent money to the same person 10 times. And that same person defaulted 10 times. In all these different okay, so I guess I'm gonna sign off. I still have a lot of editing to do. So yeah, thanks for coming every Saturday. I think 1 p.m. I'll probably do 1 p.m. going forward. Okay. I'll see everybody later. Thanks.